Hello, everyone. I see people's audio's on. While some people sign in, I just want to say thank you for coming this evening. Anybody from Florida that's here, I'm with you. And I just want to give everyone a second to log in. Today it's very special, very exciting. I love this call. I absolutely love this call. I love you guys, and we have so many people that are coming and providing value to our network. So if most of you guys we do have some new people to this industry. Andy, Smita, George, and Claudia. So just so you know, like that we have people from all the backgrounds, and so some people have little to no experience, and some people have a lot of experience. And either way, this is so valuable having these calls. So thank you for being a part. I do want to start off just so when we'll allow people to come in all the time. So we're just going to go ahead and start the show. But we can start first with a little introduction. Just like we will touch on like multifamily experience. We'll talk about, we have different questions that we pulled from our student base. But if you could just give a little slight intro and how you started in multifamily, maybe we can start with Andy.
Sure. Yeah. Wow. This is impressive. Really, 77 people on here. I'm getting a little bit nervous, maybe even a little tongue-tied. So I've been in this game probably about 20 years. I started off on the brokerage side in LA, kind of West LA area. I wasn't great at it. I think part of it, if anybody's played team sports growing up, I think the brokerage business would be a lot more like a singular, tennis or a golf, which are also fun. But I always felt like I wanted to be part of a team. So I kind of started to gravitate more towards the development side. We started doing developments in Venice Beach, California, and then we kind of started buying maybe about 2006, and then later after the crash, probably 2012 again, apartment buildings. And then now we're really focused on build to rent across the country. So I'm here to just kind of lend my experience, open up all my wounds. I've sucked at a lot of things and failed and scraped quite a few times. So I think that you guys will all benefit, new people and some of you older folks as well.
Thank you. Claudia.
Hi, everyone. I'm Claudia Roselle. Some of you probably know my husband because he's the one that's usually out there. I sit in the background a lot, but not because I don't have knowledge, just because that's my favorite part to be. But we started small back in 2009 with, like 4 plexes, 6 plexes, and 12 plexes. And we had a financial advisor that brought to our attention that we had a lot of equity sitting in our properties here in California. So in about 2017, we decided that we needed to have that equity working for us. And we started 1031 exchanging into multifamily. And we started in Missouri and have just continued to build from there. So this is what we do full time. At the time that we started, it wasn't. We were running auto repair shops, but now this is more of what we do full time. Getting to meet new people like you guys. It's always fun getting to partner with some of you. We just enjoy it because we get to know more people and just expand our horizons more.
Awesome. Thank you. I appreciate you sharing that because a lot of people do work here, right? They have that full-time job. So hearing from someone that was running business at multiple people here have like multiple businesses that they're currently running. So thank you for sharing that. Smita.
Hi, thanks, Kim. It's just amazing to see what Ryan and Tyler and your whole team has put together. Just seeing everyone's faces, breathtaking. So thank you, everyone. I'm Smita. I'm part of Pineapple Asset Management with Chetna. She's somewhere around here. and we started in residential real estate many years ago. We probably have 30 years together of experience. And about, I would say, after trying, from tax liens to auctions, so we just did all sorts of range and experiences. We said, we're ready for something new. And that was about 3-4 years ago. And we came across Ryan and Tyler, and that was very exciting and life-changing. So we started to look at apartment buildings at that time and built a new portfolio from there. So we own in the Midwest and the Sun Belt, and I'm currently a realtor, though I think honestly that's starting to fade because my life is so much more in apartments at this point. And I'm looking forward to answering any questions that you guys have on your journey as well.
Are you kidding me? Can you guys hear me?
Yeah, I thought you said that to me. I was like, what? What did I say?
Oh my God. Wow. I'm sorry. Thank you. Thank you for sharing. It just completely disappeared from my screen. Please, anybody be ready to jump in at any time. KJ, thank you. George, are you there?
Yes, I am. If you let me in, I can show you my camera.
How do I help? how do I let George in? I can hear you.
Yes.
That's
Jackson,
okay,
can
because
you make one of us other coaches a host?
Either way, here, if you don't mind, I'll leave and I'll rejoin. So, hello, I'm George Roberts, and
There you are.
Now we see your camera, George.
there you go. Sorry. I'm George Roberts, and I started out many years ago. I've had many careers. I was in bioscience and data science. And on the side, I have been in real estate for many years. I've been a landlord for over a decade. I've been in construction for at least the last 6 years. And over the last couple of years, I developed a new sideline, multifamily real estate, and I've been having an amazing time with that. My first deal was a 14 unit in Orlando, Florida, and that deal is going in a truly amazing way. We're about to refinance that, and all my other deals, by the way, are doing pretty well as well. I've done some co-GP opportunities along the way, some JV, and I've also sponsored deals as well. Over the years, I just realized that I love real estate and I love entrepreneurship far above and beyond anything that I ever did in the tech space. And so over time, it just took over, and now I am a full-time real estate investor.
Awesome. Thank you. Thank you so much, George. All right. So our first question of the evening, besides your great intros, thank you. What are your primary markets, and can you shed some light on why you decided on those markets? George, would you like to go first?
Sure, I'd be happy to. So my first market was Orlando, and I've been using Neil Bauer's methods. One of the great advantages of that is that it's totally free. If you go out to look for the Real Focus methods, you can find that on Udemy. 45-minute course. It'll teach you how to analyze a market and do it with 100% free data. So we found a couple of years back that it looked like Orlando was one of the very, very hottest markets in the United States. We got our first deal out there, and we've just continued. We've got deals outside of Orlando, and we've also recently picked up one about 90 minutes south. So I would highly recommend using data analysis to pick your markets. And like I said, Neil Bauer's methods are a great way to go. And we also had one additional bonus. My partner said, whatever market we pick, he'll move out there. So he moved out there in his RV, Mark Prokop, and he really helped us get a great start, hit the ground running. And now we've got a great toehold in Orlando. Glad, by the way, Kim, that you made it out of Orlando in time. Glad you're out there and safe. I think in North Carolina right now. But we also have another great market, East Tennessee. And for me, it's all about partners. So another one of my amazing Horizon multifamily partners is in East Tennessee. And he's great at finding these off-market deals. So I'm looking for the same things everyone else is looking for. I like to see growing population, jobs growth. And again, you've got to have boots on the ground. And we've got great boots on the ground in Orlando and East Tennessee.
Awesome. Thank you so much. I was going to try to go in reverse. Smita, your primary markets, and can you shed some light on that?
Yes. We started in Kansas and now we own in Nebraska. So I'd say the Midwest is definitely one area that we look at. And then we've now had people bringing different projects to us in the Sun Belt. So we're starting to analyze that. I think we have a couple things that are coming up in Florida. We just closed on something in Texas, and we really like those areas as well. So I guess what I'd say is Midwest and Sun Belt overall. Areas of growth. I'm totally in agreement with George Roberts. I have not used that method, so I'm going to look that up now. I'm excited. But we definitely look for economic growth. We look at the macro level. We call everything down to the micro level, the Chamber of Commerce. We're doing our research, making sure we can see some data trends and some growth where we're going. We also want to make sure that when we pick a project, that it's something that we think we can enhance the community, that we can add some sort of value, not just a value add property, but something that we can add to that community, be it that it may be that type of building doesn't exist there, but is needed, or there's a demand for something that's coming up that we think that we can provide, or something for the tenants that we can provide, or the investors. So our most recent project, we're doing a solar project on the apartment building, and we're pretty excited about that. So that would be one example.
Awesome. Thank you. Claudia?
So currently we're in Missouri, Illinois, Oklahoma, and several areas of Texas, Longview, Texas, Texarkana, Weslaco. And we are actually in escrow in 50 unit in Virginia, 34 unit in McAllen, Texas, and our offer's been accepted in Kankakee, Illinois for an 80 unit. So we're a little busy. The first Missouri one came because of a broker relationship that we had. And again, just like everyone else mentioned, and you'll hear it often enough, it's about job growth, economic growth, major airport, population over 100,000, everything that you get taught to look for, that's what we're looking for as well. And then a lot of these other ones, especially the ones that I just mentioned here at the end that were in escrow currently, have been brought to us by students, just like yourselves, that needed to have someone come beside them and just hold their hand a little bit. And that's what we're doing.
Awesome. Great to hear. Andy?
Yeah, so Kimberly, we're focused mostly in the Southeast. I'm in San Diego, so we invested for a long time in Southern California, Central California. I know that sounds crazy, especially if there's Texans out here. They're probably looking at me like I'm nuts. But I really felt like in order for us to service our investors, we needed to be in areas where, like Claudia mentioned, high growth areas. I think the other thing is we've been developing projects in the Southeast, so really we want to make sure that we've got land that's inexpensive enough and it has that growth. And then it also has, I think, another element that hasn't been listed here is really crime reduction. And the reason that's such a big deal is because usually that's where people tend to flock to as far as neighborhoods. And so we focus on like a lot of secondary, tertiary markets where we can have, Foley, Alabama, for example. So we can buy the land relatively inexpensively, low impact fees, develop projects, collect rents in that S17 to 2,400 range, depending on the area. And we really want to be in markets that want to have us, that we can add value to. So a lot of green, a lot of, we create clubhouses, and a lot of the built-to-rent communities and multifamily communities that we build happen to be in those areas where the municipalities are a lot easier to work with. On the multifamily side, we bought just this last year a portfolio in North Carolina, about 600 units. We did a deal in Houston and Austin. So we're still really bullish about multifamily. I think one of the big takeaways I'm hoping that people will kind of get with today is just with the rising interest rates. I think everybody's definitely a little bit freaked out about it, but I think if you're as an operator in apartments or built to rent, I think that you're going to be benefiting a little bit from that affordability gap. I think it's really the highest it's ever been, maybe $850 more a month for a mortgage as opposed to renting a place now. And so I think that you're going to have a lot less supply even than we've had before. And so I think that there's a lot of still benefits for the multifamily and community building that we're doing in markets in the Southeast. The other thing is, and I'll be short on my next answer so I can take a little bit longer on this one, I promise. The other thing that I do want to mention is that, in a lot of these markets before 2008, when the crash, it was really regional. And so I think there's probably every single person on this call has a market in their backyard that could work for them. I know George likes Orlando and they've studied a lot, but there's always an ascending market and always a descending market. And before 2008, everything was localized. I think we're starting to see that become now a thing where it's much more localized. 2008 happened because the water shut off for everybody, right? But now I still think that there's a lot of areas that are going to be doing well in this economy. And maybe some of those markets that were doing well before won't. But so that's all. You can cut me off next time, Kimberly, gong or whatever you want. But I promise I'll keep
I'll buy one of those for sure. I'm going to get one. The next one is super, super easy, I'm sure. Maybe what size and price investments are you able to close, or are you looking to close? You want to start, Andy?
What size? I would say, so for us, it's pretty simple. We want to build stuff that's 20 acres or above. We can build about 150 units or more. So we've got about 700 units or so under projects that are underway, either in entitlement phase or construction phase. And then for the multifamily, I think we want to be in 150 or more. That's where we can really, you start to see the economies of scale. Probably you can get to it in the 100 range, but I think in the 150, it makes a lot more sense.
Claudia?
For us, it'd be 150 to 300 as well. It doesn't mean that that's set in stone, because obviously we're doing 50 units and 34 units. We just do those differently. We do joint ventures or just different forms of ownership so that we can still partner with other people on those.
Thank you. Mita?
Yeah, I'd say actually up to about 150 units, usually BC type properties. We aren't developing, so it's things that we can actually enhance or, as I said, add some value. As I said earlier, I'm trying to think if there's anything else specific. I can't think of something, though. I will tell you that I have a particular enjoyment of knowing that we're providing something, like if there's a, not Section 8, like I don't know what you call that, layer above, or even the one right above it, knowing that you can provide for people who maybe affordability is not, it's getting less accessible, and we can actually create a win for everyone. There's something pretty juicy about that.
George?
So for me, I like under 100 units these days. I've seen a lot of amazing deals right now, and with the economic and financial turmoil, it's great to operate in a space where you can get seller financing. And for me, that has been a real safe harbor to operate from. So loving those smaller deals these days, definitely looking at bigger deals, but under 100 units, single digit millions, That's where I'm most comfortable with and where I'm seeing the very best deals.
I like that. Thank you. All right. Our next question is, are you open to expanding into markets that you're not currently investing in? And if so, what are the key factors that allow you to make that decision? George, you want to start?
Sure. For me, it's having great partners or boots on the ground. So if somebody brought me a great deal in a market that I may not be currently operating in, there's always the possibility to make that work. Great partners make a great deal work. You need both.
I love that. Anita?
Yeah, to piggyback, I think, again, great boots on the ground, good partnership. I love having fun with the team that I'm working with. Just to go back for a second, I didn't give a number on the last one, so I would say up to about 15 million on the last question for price wise, but usually we land around 5, in the 5 to 7 range. So I wanted to make sure I got that out there. And if someone came up with something that's out of the, like, that's not in our area, we'd be open to it. What we'd like is somebody who understands that there's economic growth going on in the area, that they have actually done some research, or they have a feel of that area. They're not just, sometimes we get an email and it's someone who doesn't even know the area and they're just sending us something cold. And that's a little bit difficult for everyone because we all don't know what we're heading into and we're not comfortable with that.
I like that answer. Thank you. Claudia?
So same thing everybody's saying, right? You're still going to look at that market, look for that growth, look for a major airport population, all those criteria. So yes, we're open to that. But if someone were to come to us and bring us a deal and it's in their backyard, well, they have home field advantage. They live there, right? So that makes a lot more sense because they should know the area very well. And so it would make more sense for us to partner with that person because what could they provide so much more, right?
Yeah.
Yeah, I think Kimberly, for us, yes, of course we would partner. I think that and I've been in this 20 years, and I'm not saying that partners, you can't get anywhere in this business without partners. But I think what might be interesting from a lot of people on this call to hear is, like, what are you looking for in a partner? And for us, we have a pretty heavy vetting system, and it's based on, has there been multiple exits? Is there decent reporting? Because all that stuff is, if it's not there already, you know that there's going to be a lot of hurdles, and you know you're going to eventually have to take over a part of that deal, right? So I think the boots on the ground is important. But the other thing is that contractors in general in those markets, if the reporting is not strong, then none of your investors, whether the deal is fantastic or not, are going to believe the numbers, right? Because there's just, if there's not reporting, everybody assumes that there's something going on. So I think the kind of trustworthiness of the track record. Also, I think a big part of that too potentially is liquidity, because especially in this market, there are going to be things that go down, and there's going to be, ultimately we're going to have to, dig into our pocketbooks and fix stuff. So I think that's another big factor for us.
It's good that we talk about that, like teams, right, and partnering. The next question is, what qualities do you like to see in a GP team before you say yes to sponsoring them?
Yeah, so I think I pretty much answered. But let me just give you kind of a couple of examples. We did a deal this past year. We exited a deal this past year. GP was the sponsor, co-sponsor was incredible at doing the job with the construction, with the kind of organization, with making things happen. We wouldn't hear from for 3 months. We'd have no idea. Our investors are calling us, right? Because we're the fund that invested in this particular co-sponsor. So at some point, that means that we're going to have to basically go out there, manage these boots on the ground ourselves. And it doesn't matter if you get a 20% IRR. It's kind of like you're going into a bad restaurant, right? You're not mentioning why you're not investing with somebody again. You're just not investing with them again. So I just think that before people that's the easiest part, and it's the part that I find most people don't have locked down. The communication part should be the easiest part, right? You got every single template, but I know as an operator myself, the last thing I wanted to do on a Sunday night was look at all the spreadsheets from the construction team, the asset management team, accounting group, and pull together a report that's succinct, right? That's if they're used to doing the construction and the operation, that's the last thing. So the reporting is a big part for us. Claudia, what about you?
For us, it's someone that pays great attention to detail. If that person doesn't have the details and doesn't know the information, I mean, the numbers speak for themselves a lot of times. So if you can't answer simple questions like, why is this, how many vacancies there are, then, you don't know your information. Someone that has positive attitude, that's friendly, likable. And for us, especially, it's teachable. If you come and, you don't know what you don't know, right? That's the usual thing, that you don't know what you don't know. And a lot of times we've been with people that think they know it all and are not teachable. And so that's made it so we just, if you're not teachable, then it's hard to come alongside you and guide you in the right direction. just because of experience. And we are learning from other people as well, right? When we partner with them, we're learning from them as well. It doesn't matter if you're in here for a few days, a few months, we're always learning. So it's very important for us to, not only for them to be teachable, but we're also teachable at the same time.
Thank you. Smita?
I really like what Claudia said. I thought that was just great. So it's nice to be with such heavy hitters. And yeah, partnership is very important. If we're looking for that GP team and how they're working, what I like to see is that we start clarifying roles. We give an idea of the overview of the process that we're going to go through from beginning to end so that everyone's on the same page. We like to enjoy or break it down to weekly goals so that everyone has an idea of where they're going and what that vision is. I think that if the GP team is all aligned with that, then that is, well, ideal, number one. And she says teachable, I often say coachable. I think we're all in that process of being in an open communication. There was recently a group I just spoke with and I said, I'm creating a safe harbor here. We're going to just talk, we're going to talk frankly. And it was really good because we were able to have some frank conversations there. And that authenticity or sincerity is important because, you know, all of you as a group are about to take that ship and you got to take it into the harbor. You literally have to get that building to the ending and the outcome you want for your investors and your community. And are you all going to do it? So you want your GP team to be strong and willing to go that distance and play that game and do what it takes. And we like to do that and break it down so that everyone feels that they're pretty clear about what they're going on and getting into.
George?
So I would say first and foremost, a growth mindset. If you're clear about what you bring to the table and you're serious about growing in other areas, then you are clearly up and coming. I like working with people that are going to be far down the road in 12 or 18 months.
I love that. And everyone here should be about that life, right? We are the multifamily mindset. Our next question is, when analyzing a deal, how much importance do you put on the quality of the deal versus quality of the team? I'm going to start with that, George.
Well, I'm going to say that they're both equally important. You really need both. A bad team can kill a good deal. And obviously you need a good deal to have the spark to light that fire. So you really can't afford to be without either. I think you really do have to evaluate both as being on par.
Mita?
Yeah, I would agree. I mean, honestly, though, you know what, I'm going to actually add, I think your team can actually take it down, as in if they're not strong and people are chipping internally, then that can actually really harm it. I would rather work with a strong team and wait for the right deal than just jump on good deals. I mean, I love good deals. Who doesn't? You know, but that strong team really takes the stress off you. It makes it easier to go and work and achieve that goal that you've put out there. And it's important when you set that mindset. Literally, that mindset can make or break you. It's like having the right property management. They can make or break you. You know. So I'm going to say, yeah, the team.
Thank you, Claudia.
I'm going to say they go hand in hand for us because you can have a great deal, but a crappy team. So if you don't have, or the other way around, right? You could have a crappy team and not such a great deal. But so I feel they go hand in hand. We've actually decided not to participate a second time in a deal because of the people that were involved the first time with us. So for us, it's important. You have to have the alignment. I've always said forgive this because not everybody's married. So maybe this isn't the right thing. But for me, it's like a marriage, right? A short-term marriage. Maybe it's for a year, maybe it's for 7 years, maybe it's longer, but you need to be able to like that person and like those people and be able to work with them. Because if you don't, then it just, it's like when you don't like someone and you're at an actual job and you go in and you're miserable, right? Do you want to be miserable? No. So it's the same thing. You're working with people and you want to be able to work with people that you like, that have those same values as you do.
What a rookie. Yeah, I don't think a good team does a whole lot of bad deals. I would much rather have a mediocre deal and a great team. I think a mediocre team can kill a fantastic deal. So for me, everybody says that they kind of conservatively underwrite, et cetera. I think that you're going to be able to hit those metrics. You'll know whether it's a good deal or not. But if you don't have the team in place that's actually boots on the ground, managing the asset, managing the property manager, managing the balance sheet, and being consistent, and so that's the kind of partners that we want to have. It sounds like I'm hearing that kind of as a through line today, but. To me, people first in almost everything that we do.
I like that. Thank you all. The next question is, what is the best way to present ourselves to you? And when should the initial outreach occur?
Yeah, we're pretty open. So we've got a team about 10. We've had a lot of people that have kind of come through our company over the years that were maybe newer, but they came from a different background. I'm of the mind that this is not a game that you can play by yourself. So you need all skill sets, even outside of real estate. There's marketing, there's deal analysis, we had actuary helping us on deals. I mean, there's just so many different roles that can be played. So I would say after you have read some books and can conjure some good questions, I think that's when you can come to most operators, because most people understand that you're never going to be able to learn how to ride a bike by reading a book. So you're going to have to get in sooner or later and talk, with the operators and the people doing the deals.
For us, I think it would be ideal if people would be able to reach out to us prior to submitting an LOI. It's back to that partnership. Like, how do you know someone and you want to get into a partnership with them if you haven't talked to them, if you haven't actually gotten to know them? So, and as far as the LOI goes, basically you're putting information in that stage that reflects back to your sponsor. So if you haven't really talked to a sponsor, what are you submitting in an LOI? You don't know their information. So really the contact should be starting at any time. You should be developing those relationships. I know everybody talks about it. It is about relationships, but they shouldn't be starting when you need it. They should be starting now so that you get to have those people in your pocket and you know them.
Love it. Thank you. Smita?
Yeah, I'm going to agree with Claudia on that. I think that's a great idea. Just that 15-minute conversation or some conversation with someone in advance and creating that relationship in advance is so helpful. I appreciate it when people do that with me very much. And then the second part that I like, because people come from very different backgrounds, but if you've done the training, I like it. If you've actually scoped out that market, you have an idea. You're not just coming to me and saying, I would like it if it's pre-LOI. But even more than that is that you actually have an idea of what you're submitting and what you're doing, some level of it. And if you don't, that we have conversations beforehand rather than, I'm putting this sort of EMD, this is what I'm throwing out there. I think I've got a good deal. And then I'm sitting there talking to you for 30, 45 minutes to find out that it already went under contract yesterday with someone else because I actually know that person. And I'm like, I don't actually have that sort of time, to be honest. It would be really nice if that person scoped it out and is really clear about where they're wanting to go, what they have an idea that was that market that they wanted. That was the project that they wanted. Fine. They may not be able to come in time. Sometimes it does slip out from under you, but they have an idea and they've done some of that work. Maybe they've done the preliminary underwriting or the full underwriting. That would be fab so that we can actually talk the real numbers, not just I have a deal. So that's what I like to see. And it also lets me know that person isn't afraid of getting their hands wet, that they've thought about it, that they're deliberate, that they are taking and valuing not just my time, but their own time seriously. So they are really putting some effort into that project.
Like you. George?
So I feel it's appropriate to reach out whenever you feel like I could add value. So, I mean, ideally you've gone through, you found the best points of the deal, maybe the weak points where you need things to be fleshed out. Great way to reach out to me was with email, just george@horizonmultifamily.com or through LinkedIn. But again, I understand how it is. I've been through many deals and a lot of things. You have to turn over a lot of rocks to find a great deal. So I'm not terribly troubled if somebody comes in early days and says, hey, I'm not really sure where to go with this next. I'm happy to look at it and give you my opinion and maybe hook you up with somebody that would be appropriate, if not me.
Thank you. I like that. Our next question is, how involved are you on the deal from acquisition to closing and for the life of the deal?
Can you repeat that one more time, Kim? I'm so sorry. Cut out my connection.
Okay, no problem. How involved are you on a deal from acquisition to closing and for the life of the deal? Did you want to go first, George?
Absolutely. I'm always involved in the entire life cycle of the deal. I love the entire life cycle from underwriting, raising capital, running the deal, refinancing. The finance side is exciting for me as well. Love asset management. So, I'm happy to hop in anywhere. It's just really a matter of where I'm needed the most. But I do like to be involved the entire life cycle of the deal.
Thank you. Samita?
I'd say I'd like to be involved in the entire life cycle as well. We like to be in touch, pretty much have a weekly call and when needed more. As it's if we're sponsoring you, it's your deal, that's fine. But we all as GP need to be on the same page. And I think that, the ship where all the oars are going in the same direction, it's going to get there faster versus, people in all sorts of different directions. So yeah.
I'm gonna just hop in here real quick before Claudia and Andy finish answering, because George mentioned it, right? And Smita too. Like we talk, like, so here we teach the different roles and responsibilities, right? So George mentioned from the underwriting, and then takeover and throughout like asset management and refinance. So there's all these different roles that happen. And so the following question, I just want to tie it in here too. And if you guys want to, we can circle back to you guys. But what I'd like to add to this question, Claudia and Andy, so how involved are you? And then what are you willing to trust? Like I mentioned, we have new operators here. Is there roles that you can, if you're involved in the whole deal, you'll, walk with them hand in hand and trust with them and teach them along the way. Because the next question is, what roles and responsibilities do you take, and what do you trust a new investor? So we know that a couple of them answered all the roles and responsibilities, or were helpful. But is that okay with having new investors and teaching them those?
So
does that make sense?
It did. So I'm still going to say from beginning to end, right? From beginning to end. The reason being is, a lot of times we're bringing in investors that are coming in because they trust Rob and myself. So we need to make sure, like Smita said, we need to make sure that asset is progressing in the right direction. So we want to be part of that. So in the beginning, we're part of the due diligence. Rob does the underwriting. You get a team with us, unfortunately, right? Because you get both of us, or not unfortunately, but fortunately. So, you get Rob for part of it, you get me for part of it. We both have our strengths and we use them effectively, because otherwise we would be, running around with our hands flailing, right? But at the same time, like you said, if we've come along someone and let's say, I don't want to put a time frame because everybody learns at a different speed, right? But if someone has taken the lead and showed that initiative and they've shown that they can handle a portion of it, yes. Because do Rob and I want to continue having a full-time job in managing an asset? No, right? We have plenty of other interests that we want to be a part of. So if someone can take over the asset management and they've learned and we can trust them, sure. Maybe the first few times, we do a lot of Zoom calls. Like Smita said, you do weekly calls. We do weekly calls. We record them on Zoom. And, like maybe the first few times we're on there, the next few times we're not, but we can still see the recording and see how they're doing and then still teach them because we're still seeing that information.
Yeah, I think this is where it starts to get a little bit tricky, Kimberly, because on the one hand, you do want to have an understanding of the entire deal. On the other hand, at some point, if you want to scale, you need to let go of those things that you're either not good at, or maybe it's that you're good at, but they're sucking a lot of your time. I would get stuck in these underwriting, meetings where we're going back and forth on this or that, and it's just a time suck. So I think at some point you need to be able to build a team of people that you trust. And again, it comes back to people. I know as trite as this sounds, but I do think that there should be some separation. Now, the weekly meetings are crucial, right? But you got to have an integration of the guys that are finding the deal. We've got one of the great acquisition guys, I think, in the country. He's worked with multiple large organizations, REITs, et cetera. And so I trust in him to be able to find those development projects for us. And by the time that we're kind of putting in that money for options and then starting our entitlement process, or if this is a multifamily project of due diligence, I think that there needs to be I'm becoming the bottleneck at some point. So I think as you guys are building out your businesses, I do think you should be thinking of that as ultimately I'm going to be in a position of seeing where all the pieces fit, being able to explain the deal to investors as clearly as possible, and being able to explain the roles of each member on the team so that you're able to kind of delegate properly. But to me, that's the hardest thing about real estate, is because it is not a one-man job. It is, you got to have underwriters, you got to have acquisition guys, you got to have marketing people, you got to have the integrators on the back end of the operations, and all of those pieces. You can run yourself ragged if you try to do it all yourself. So ultimately it comes around back to the relationships that you're creating.
I just want to go on record and let everybody know, thank you for that, Andy. Claudia and Rob are very interested in other things, like spending their children's inheritance. If you don't know what it is, look it up. If you don't know, check it out. Our next question. These guys don't even know. That's homework for everyone on the call. Come back and tell us what that means. Okay, so when do you deem appropriate, the appropriate time that a deal sourcer uses your bio, experience, your portfolio, and website?
I would say that we're probably a little more liberal with letting people use I think we've created enough standard operating procedures where we kind of are able to let our co-sponsors know here's exactly how it works for us. This is what you would be paid. This is what we expect your role to be. These are the meetings that we have. So there is some structure to it, but I do feel like there's so much talent, especially in the real estate game, coming from other industries or coming from residential to multifamily, that we're probably a little bit more open to working with people and allowing them to use the Legacy brand if they feel like that could benefit them and ultimately benefit us. Everybody on this call has probably been burned in some way, shape, or form by a partnership that went bad. And that doesn't mean you don't do partnerships. It just means that you move on. It's like a relationship, but you try to learn from that, create as many. We use the, I don't know if anybody is familiar on this call, is the entrepreneurial operating system. It's EOS from the book Traction. So we really try to have all of those pieces in place, and then when somebody plugs in, they at least have a starting point.
So for us, I'm going to speak for Rob and myself. You can use it if we've already been working with you as far as, you contacted us for the LOI. We've gone through that process with you. We spent some time. We feel comfortable together. Again, it's that relationship building, right? Like if we've gotten to know you, we feel comfortable, then we're going to go ahead and tell you, go ahead, use our stuff.
I would say a conversation is necessary. So yeah, that would be very helpful if we knew that you were about to do that. When Kim asked that question, I was thinking, well, at least we need a conversation. But anyway, so yeah, if you let us know and we're having a conversation, then yes, I'm going to say, oh, it sounds like this is the one we're going to be working on. Great. We can move forward. This is our information. This is what we would share. This is what we'd expect.
Thank you. George?
So I'd like to say, just keep it simple. You want to get explicit permission for that. But the upside here is that, look, I'm really approachable. So if we're working on something and you think that I would be valuable to put into your investment packet or whatever, your website, et cetera, just ask me, and that would be the appropriate time to move on. That way, there's never any misunderstanding.
Thank you. I love that, George. Just so everyone, I've been on meetings with George and I was like, hey, we should chat. So, it's absolutely. So it was just easy. Sometimes I think we get intimidated, right? We know we need them, but sometimes it's okay. We have value too. So it's not like we're extremely needy. We have value and we can share that. The next question, sometimes in this business, you get a hot lead and there's not a lot of time, right? So the question pertains to how much time do we give you to respond to a request to sponsor? So before they move on, they got this, hot deal, they underwrote it, it's looking good. They present it to you, but you don't answer. So how long does it take for you to respond before maybe they should move on to their next person in line?
So I'd be happy to start. For me, I would say generally about 24 hours, but I'll also be very explicit about that. Sometimes if I'm working on closing a deal, for example, when it rains, it pours, just a couple weeks back, I closed 2 deals in the same week. And it's feast or famine in this business. So I'll be clear with you if it's not something I can look at for 24, 48, or 72 hours. And don't be afraid to get on the horn too. If we're working on something, I would definitely give you my private number. Call me up on my cell phone. And sometimes it doesn't hurt to give a little poke the bear and say, hey, do you get a chance to look at that? That can be very helpful.
Like it, Smita?
I say yes. We like to get in touch with you within 24 to 48 hours. We don't want to leave you hanging. I'd also like to know, by the way, conversely, if you are moving on, send a little line and just say, hey, we haven't heard, we need to move on, or for whatever reason, or it's not working. We just, the numbers don't work. We decided that that's not going to, or so that we are all on the same page. And yeah, a quick email. I like that. If we're inundated, which happens, then just send an email. We really like talking to people and meeting everyone. So hopefully we're not going to growl.
Same for us, 24 to 48 hours. And again, we're out spending our kids' inheritance. So, no. So 24 to 48 hours, I would almost encourage you guys to, if it's more time sensitive than that, then maybe put it in the subject line if you're emailing us. Hey, we need a response sooner. Just because we do have a lot going on. We have other projects. We're doing other investment stuff too. And so a lot of times I tend to answer emails very quickly, but sometimes Rob doesn't because he's either at an event or doing other stuff. So yeah, if you, put it in the subject line, maybe, this is time sensitive, need a response sooner. We may be able to get a response to you sooner than the 24 to 48 hours.
And I'm going to add something. Oh,
yeah, go ahead, Smita. Yeah.
Sorry, thank you. I think this might be helpful for everyone. The sponsors may also be, if they can't do it, they may also know of someone else who can, who might be a better fit for that project. So coming back and saying, hey, I haven't heard back, or whatever, do you give any advice, any insight? That's helpful too. And that person may have the time or know of a perfect fit. And so you shouldn't hesitate on that. You know what I mean? Don't just say, hey, they didn't, they dropped the ball. We're all human.
Yeah, I think this is a perfect example of you're going to have to get over yourself. I would send emails earlier on in my career and I would just, oh yeah, of course, I'm the most important person in the world. They're going to respond to my emails. For me, I think it's text. And I was just going to say that I think if you approach it, is there anybody that you know? One, it's a little bit less forceful, and if you can text or call, I think that's you're going to have a much higher percentage of people responding because you got them thinking about it. Now, you send that in an email, If you're like me, I try to limit my emails throughout the day at certain times. So I'm probably not going to get it. But this is one of the things about real estate that sucks, right? Is that you have to be able to accept the no's and you have to be able to follow up. And even when you don't feel like it, and that's like every business in life, right? But especially in real estate game, because things are happening so quickly and everything's so dynamic.
Awesome. I love that. Thank you. Did you guys hear? Follow up. I love it. So we have some questions now, shifting gears a little bit more on. It's just a couple, and then I do want to get to some in the chat. But so this one is more along the lines: of how are you handling investors' concerns with inflation and rising interest rates?
I'll take this because we actually just got I don't say gut punch. I mean, we had a deal, so everybody loves hearing these stories, right? They're kind of fun to I don't think we have a word yet for the German Schadenfreude, but we had a deal. We had signed the loan docs. I'm not going to say the lender. They're a lender that we've worked with before, a major lender, one of the largest lenders in the country. We'd signed the loan docs. They came back the very next, actually over the weekend, after the weekend, we were supposed to close on Wednesday, and said, we are going to be dropping your LTC from 80 to 75%, and we're going to be pushing up your spread another 50 basis points. So what does that mean in the large grand scheme of thing? If we've got a $32 million deal and we're raising, equity, that means we've got to raise another $1 million by the time we close in order for us to get the deal done. And we've got a spread plus SOFR at, let's just say it was 5 points was a spread. And then you got SOFR, which is hovering in that 2.5 to 3 range. I think it's at 3 now. So that's not as big of a deal when if you've underwritten it conservatively and you feel like you've got enough room. But now you got to basically dilute the investors that you had before, right? Communicate to everybody that was your partners before, and either find another deal or just swallow it. So we're in the process right now of looking at other options. But I think that's an example. Is we're really living in kind of unprecedented times. I think that we have the opportunity to lean a lot more on community banks. I think community banks, we've talked to quite a few, there's still a lot of money out there. We're in the built to rent space, so I think it's a little bit easier to finance for on the new stuff than it is some of the 70s and 80s build. But I would really focus on making sure that you've got backups upon backups and that you're doing your homework on all, and you've got somebody there that's kind of focusing on those terms, because it's changing daily. And I'm sure I'm going to come up with a couple more things as people talk about it, because that's really what I spend most of my day doing, honestly, at this point, is setting up, our loans and deals and trying to figure out how we fit all the pieces together.
Thank you. Yeah, please chime in if something else comes to mind. Claudia?
We're just being more conservative in how we're underwriting, so we've adjusted that. And a lot of times, touching on what Andy just said about lenders, we've always had a broker lender on our team, and we always kind of touch base with him to see what the market's doing, and kind of get a feel for where are we for the percentages and all that. And he's good insight. So if you guys have that kind of relationship as well, that's always helpful to have in the back pocket to kind of just reach out and get some of that information on what's going on in the market.
Nita?
I think it depends on who we're talking with. When it comes to inflation and interest rates, you're right. The deals, like the last one we just closed, which we closed a week and a half ago, I mean, it was literally nail biting every day. Oh, we're closing. Nope, we're not. Oh, we're closing. No, we're not. I think, Kim, you knew that because we had been texting. But what we do when we talk to our investors is let them know multifamily is still a safe space and I love that word, safe harbor, but it really is, because the market goes and it's turning upside down and people aren't buying homes. They're now not able to buy. So where are they going to go? They're going to keep renting. And if they can't rent that Class A property, where are they going to go? B, or whatnot. And we like that we have that experience and that we can have people understand that. I think the other thing that we bring up is we are underwriting more conservatively, just to add to what Claudia was saying. And the last part is if you find a really good deal and the interest rate's high, those interest rates are going to drop eventually. So then you're going to just refi it and have a really wonderful deal that's sweeter than when you started. And isn't that a nice thing to have, or you're going to sell it and it's okay. But yeah, the underwriting of that loan are key, and they are fluctuating. It is fluctuating a lot right now.
George?
So I would say that with all of the economic uncertainty right now, that fixed financing is great and seller financing is even greater. And my favorite thing of all is to get these mom and pop deals where there's just tons of meat on the bone. We don't know what's going to happen next. So it's very, very important to buy right now. So the more meat on the bone, I'm not so worried about the deal size right now, but I'm looking for those deals where it's just very, very clear that numbers work no matter what happens next.
I like it. Andy, did you think of anything?
Yeah, well, I was thinking about what George, where are you, by the way? Are you in a cave or something? Gorgeous George?
Yeah, I'm broadcasting from an undisclosed location. I like this black background because it's very mysterious. I can't tell. I could be driving down the street. I could be on a sandy beach. But I'm actually in my office.
I was on his podcast. Yeah, I was on his podcast and he made me call him gorgeous the entire time. Gorgeous George.
That's not true, but I do have some fans. I have some fans.
What is interesting, I think that I've seen a lot of underwriting, and I think that you can lock in. Cap rates are extremely expensive. I think ours was somewhere in that $150,000 range just for, a 3.5% cap on, whatever that spread is. So I think that if there's a lot of operators out there right now that bought, deals in those 3s and 4s without rate caps. And so now all of those loans are being adjusted now. And you're going to see, a lot of operators where they're struggling. They either got to sell or they've got to recap, or they've got to, go back out to investors and call capital. So I think there's a lot of opportunity still. And I think that if you're just picking those deals and with the understanding, and the other thing is, I think we're starting to already see some of the values come back down. Like you were probably on a lot of calls with operators where they're like, or sellers that were saying, I'd never sell it for less than this. They're seeing what's happening out there. We've already seen it in land prices coming down. So I think what Smith said, eventually, it will come back to stasis, but you just have to be really smart and picking multiple exit strategies. That was the other thing I want to say, Kimberly, is that if in whatever those deals that you are buying, you've got to basically account for the fact that you might have to hold on to an asset with a cap rate that's going up. Maybe rents are still increasing, but the values seem like they're lower, but you're still able to collect cash flow, and then you can wait it out. And those are the kinds of deals that I think we've got to really be focused on.
I like it. Thanks for adding to that. This may tie in very closely. Has your investment strategy changed over the last 90 days? And if so, how?
Is that me?
Yep.
Okay.
Sorry.
Yeah, there's no doubt that we had kind of spent a lot of time talking with private equity, and maybe there's like a second tranche. So let's say you have your first loan with your senior lender that's like 70% loan to cost, somewhere in that range, and then you've got your next second tranche, which might sit your either mezzanine debt or your private equity guys. Maybe they'll get you up to that 85% loan to cost number. And then you can raise that last 10-15% with all your friends and family and whatever your network is. But in order to have that second tranche 90 days ago, with our liquidity and track record, et cetera, we would basically just be able to get, a private equity lender to come in, and they want 2 times the collateral of whatever that amount is. Let's say it's $5 million. They want, $10 million in collateral on some of your other projects, but they would take, little slices of partnerships, et cetera. The thing that's changed now is they want collateral on just wholly owned properties. You can have debt, but they can have, a bunch of partnerships and syndication. So that game is pretty much dried out. So now what we're seeing is we've got to be prepared to either raise now 30% of that from retail investors, which is pretty expensive, right? And we've got to have the systems in place that are co-sponsors, people that help us bring in capital and our co-GPs on the deal. We've got to have a lot more benefits for them, so that it makes sense. If we were giving them a certain percentage for their role, maybe we give them more, and that we have those systems in place like toolkits, et cetera, so that they know exactly how to express our deal, because we can't really count on that second tranche money anymore.
Right.
Claudia, has anything changed your outlook on the last?
For us, we just stopped using bridge debt because of the uncertainty. But I do want to point out that 2 of the deals that we're actually in escrow on right now, we're assuming loans. So those are out there right now. We're assuming I think one of them is at 3.4%. So yeah, got to keep looking for those.
I was going to say, I think you asked originally, what's the difference that we're doing at this time? One other thing that we're doing is our underwriting. We've said it, but it's become more conservative. Jetna and I are running multiple models, so they're just looking at our numbers much more closely so that we have an idea of, if this happens, then this is what we're ready for. And if this happens, then this is how we'll move, so that our investors, basically, that we're taking care of the parties that we work with.
Thank you. George?
So for me, it's just a matter of dialing in. I have not changed my approach. I think my approach is valid right now. And it's just a matter of focusing ever more, making sure that we're buying right, making sure that we have the right deal, the right financing, making sure that we are ready to go no matter what happens next.
I like it. I like it. Thank you guys so much. I have just a few fun questions. Since I get to be the host and it's all on me, I'm going to ask some fun questions. I have a grand finale question, and then I will, if it's okay with y'all, we will hit the chat box. But first, my question. So I'm going to spit these out. These are like supposed to be, like what they do and those things like rapid fire, like super fast. It's just, yeah, quick. So I'll say it. You guys can just say your answer if you want. So the bonus questions are talking or texting?
Talking.
Andy?
Talking.
Talking?
Texting.
Texting. Me too.
Texting.
Andy?
Yeah, talking mostly.
Talking too. Okay. Ladies like texting. I like it. Dawn or dusk?
Dawn.
Dawn.
Yeah, Dawn.
And when I was younger, maybe, but dusk.
Mountains or beaches?
Beaches.
I'm a San Diego guy. Yeah, beaches.
I'm gonna say both.
Yeah. Okay.
I'm gonna
George?
say mountains, but I'm actually headed out to the beach now to walk. It's got to be like a sunset thing, like Andy mentioned. I gotta watch the complexion.
Yeah. George likes his long walks on the beach.
I'm not laying out though.
Climb a mountain or jump from a plane?
I jumped from a plane a couple times, so I'm not doing that anymore. Now I got 3 kids. I don't think that would be. I wouldn't want to see that in my obit. Oh yeah, this idiot, he jumped from a plane, survived by his 3 young kids.
Climbing.
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 Yeah,
Claudia, are you
I'm
sure?
a hiker, so I'm gonna say climb a mountain.
Okay. Last one. What is your favorite junk food?
Dark chocolate.
Pizza.
Saganaki.
Yes.
I can fry
Yeah,
that
I'm a-
stuff up all night.
I might have to do some research. Andy?
Yeah, like those hot Cheetos. Like I wish they didn't exist.
I love it. Thank you guys for having fun with me. The grand finale before we hit the chat. What is one thing you learned later on in your investment career that you wish you would have known earlier? Go ahead, Andy.
Yeah, this is going to sound counterintuitive because you're coming to listen to experts, but experts just don't know. And what I mean by that is earlier I trusted a lot of my instincts more. Like I've done a lot of the research, I've studied, I've talked to people, I've kind of triangulated like what's likely the deal and what are likely the scenarios. And then I go to my mentor. He doesn't have any of the information. He makes a claim, and I capitulated, right? And so I basically lost all of those opportunities because I didn't trust in my instincts. So I would say you're doing your research, obviously, but only you know the nuances of kind of what you've studied and what you've learned over time.
For me, it was so like I said, Rob and I work closely together, and then we partner with other people. So for me, it was important to start verbalizing when because a lot of times, Rob's very outgoing and he gets along with people, but I wasn't verbalizing that. And I feel like when we're all part of the team, I still had a role to play, and I couldn't play it if I didn't have the right people beside me. And so to me, it's important to have that right relationship all around. So I'm coming back to the relationship thing, right? You just need to start now. And I felt like sometimes we were jumping in just because the deal was there. And you don't want to do that. You want to start establishing those relationships now.
I agree. Smita?
In the beginning, I think two things actually. One is for those of you who are just sitting back and you're nervous, it's okay. Everyone's nervous, and just jump in. I'm one of those people that I have to sort of jump in, even if I make a fool out of myself, because then I know, then I've learned that I got the scrapes and I can actually do it properly. So I just say jump in. Honestly, you've got a lot of people here who are going to help you out. Use them. Reach out. Well, not use them, but you know what I mean. Reach out to them. Partner with them. Team with them. So that's one. And the second is, as much as you research and you do everything, I call it the oops or the surprise that every deal is going to have. I experience. Maybe everyone else here hasn't. They've got it perfect. But there's what I call that surprise factor, like a little surprise party, something that you didn't expect. Yay! There it is. And I like now knowing that I plan a little bit for that. I plan. So there's only so much you can plan for. So I plan for the surprise. And then when it happens, rather than hyperventilating or going nuts, I'm like, oh, there's the surprise. Okay. I was waiting for you. I'm ready. And that actually sort of helps in mapping out each project.
George?
So I would say the one thing that you want to focus on is your personal growth. Invest in yourself every day. You still got to hit these KPIs. So whether you're going to meet 5 passive investors this week or you're going to underwrite 3 deals, you still have to do that. But no matter what, calendar it, block off the time, do what you have to do. Make sure that every day you get better at being you. But actually, Kimberly, I thought you were going to ask what our favorite theme song would be for our.
I was.
So I have a
You have
prepared
an
answer
answer
for that
for
too,
that
because I do have a theme song. It's AC/DC Back in Black, because when you walk on the stage to Back in Black, you immediately seem at least 30% more authoritative. So definitely recommend it to anybody. If you're a speaker at an event, make sure that they have you walk onto Back in Black.
I love it. That's good.
I do too. I love it. I totally forgot that one. Yeah. Smita, Claudia, Andy, do you guys have a song?
Favorite song is Pharrell's Happy. I mean, before we got on, what am I playing? Happy, and I'm just totally minioning out. I'm a pretty goofy person, and I'm going to segue for just one sec, but I think mindset is so important to take that time in the morning. I meditate 1-2 times a day. I write those affirmations, or I don't want to say affirmations, things that I appreciate. When we underwrote in the beginning, Jeff and I are like, we're going to underwrite 200 to 300 properties in that first quarter. We're just going to grab it. We're going to underwrite. We're going to understand those numbers. We're going to take them down. We're going to talk to lenders. And we just tore it up. Mistake, no mistake. It didn't matter. But then we got really handy with it. So I think all of those things really helped. Back to the theme song.
I got nothing. But I did want to hit on something that George said, because I think it's really so important, and it also ties into what Susan said. It kind of comes back to the get over yourself part, because like when I was in my 20s, I always thought, everybody cared what I thought. Nobody did care what I thought, but I was always worried about what everybody else thought of me. Now I don't care as much. But I was talking to my dad, who just recently passed, and he said that the one thing, he was a basketball coach, and all he focused on was his losses when he was playing. When he was coaching, when he was playing, all he focused on was losses, how he could get better, et cetera, et cetera. Now he looks back on his life, and all he thinks about are the relationships. So I think that if you can, even the introverts here, if you can really get out of your own skin and reach out to people that can help you, I think one, it will be much more fulfilling life, and this business will be so much more fun. Maybe a Gangster's Paradise for my Coolio who just.
I love Coolio. Thank you. Oh my goodness. Claudia, anything?
Cheerleader by Omi.
I don't know if I've heard that. I'm taking notes too.
I was thinking it for you, girl.
I love it. So I would like to see if you guys can enter in the chat your preferred contact for people to reach out. Thank you, George. I've been seeing you throwing that in. I appreciate it. So if Smita, Andy, and Claudia, if you can put your contact information in the chat. I'm going to go through. I looked up the first question that was typed. If anybody has a question, we only have a few more minutes. I really am trying to hit the 1.5 hour mark. Usually these Thursday calls that we have with our students are an hour, but this is so much valuable information. We definitely extended that out for a bit. So you guys are putting your stuff in the chat. One of the questions that came in was, what type of properties do you look for? As in vintage, unit mix, unit size, etc. And anybody can answer. You just want to jump in there. Claudia?
Okay, again, Rob's the one that usually does this, so I'm not going to feed you wrong information, but I want to say, I think we're doing 1980 and above, but I know that we've invested in older units too, because they've been remodeled and refurbished. Unit mix, for us, I think it kind of depends on the market as well. Because if, for example, if it has like 1-1s and it's a college area and we know that, then it makes sense to invest in that.
Yeah. Like that. Anybody else? Smita, Andy, George?
Sure. I mean, I like 1970s and more recent. I still like some heavy repositions. I know that over time people tend to go for the Class Bs, but I still consider myself young, so I haven't been beaten down yet. So as long as it's not too old, 70s, Class C, usually 100 units or less. I've been involved in larger deals as well. Definitely looking for bigger stuff, but those are the deals that I'm liking the most.
Yeah, what we're really excited about, and I'm hoping that you guys look into it, because I think it's a trend, I think it's here to stay, is what we call pulled apart or horizontal multifamily. And so we're looking at the stuff that's already built would be Bs in secondary, tertiary markets, but the build to rent model is where we feel like most of the Wall Street money is going, where a lot of the people that were living in nice apartments would love to have big backyards and a doggy door and their own separate, and we can manage them exactly like we would multifamily. I think it's here to stay. I think it's been proven already that we've been able to get some projects done. The rents have been increasing, so I would encourage people to really look at build to rent. We've got a lot of stuff on our website about it, and I think it all dovetails well with what you guys are learning on the multifamily. We still love multifamily as well, but I just really think it's something that people should look into.
Okay. Did you put your website in the chat?
I did, yeah. LegacyAcquisitions.com.
I
think, we've generally focused on Bs and Cs. That's where we're at. And I'm trying to think, they've been around. up to about 100 units. We would like to find something that's a little bit bigger. We're open to that. I'm trying to think if there's anything. There's a couple that we're looking at that are more. I don't know if I have much more to add than that. Sun Belt and Midwest, what I said earlier.
Mhm. Thank you. So this next question, I'm going to try to, I'll read it as they wrote it, but a little background. Sometimes, we get different information, right, from different sponsors and different, are they going to be more hand-holding, or are they going to sign on the line and let us, take over? So a lot of times we have students that are asking about splits. So the question is, what percentage are you expecting to take from the acquisition fee and cash on cash flow as a sponsor?
For us, it depends on the deal, and it depends on what everybody's role is. So it's hard to say, hey, this is going to be the number, because there's no set number, honestly.
Mm-hmm.
So
Yeah,
are you referring more to what we would require with our co-sponsors, like what would we pay our co-sponsors, or are you referring to what would you ask for? Yeah.
So I think when we talk with the students, we talk about, that we know in a deal, typically it's 70-30 split, right? And then as LPs, GPs, and then of that 30% of the GP, sometimes, they kind of wonder, like, what does that look like? Of this 30%, how much is going to there? We let them know for sure. And we all know, like, things vary, right? Like Claudia just said that.
Yeah, I think for us, we're typically in that, and remember, this is, if there's anybody from the SEC, there's got to be roles. There's roles. It's not attributed to just what amount you're raising. But in general, we set aside about 30% of the GP for the capital raising group. So if, and they would usually come on in addition with either asset management role or a marketing role. You can have boards. We have a quorum call that we can do quarterly, so that if you ever get nabbed by one of these sneaky guys, that you can show exactly what people are doing, what their roles are. But I think it's fair to deliver 30% of the GP. So let's just say that, we had a $5 million raise. Somebody came in, they raised all $5 million. They would get 30% of that GP, 30% of the acquisition fee, the AM fees, the asset management fees we would keep, obviously in order to operate the property. But that's typically what we did. And I think on some projects we've done 25, if we've done a lot of the raising ourselves, and in some cases we'll do 35. Is that what you're asking? Is that what you're
keeping the GP for like a sponsor percentage?
Yeah. So in other words, like Kimberly comes on and she decides she's going to do all the marketing and capital raising. You raised all $5 million, you get 30% of our team.
Okay. Of that, so I hope everyone's getting this. Of that 30% for the GP broken down into 100%, then this Andy would keep 70, and then I would get 30.
Well, yeah, Andy is partners, exactly. So Andy and all the other people that help get us there. But yeah, exactly. So when you consider as a portion of the deal, just multiply that by 3, so you'd be at 9% of the deal, 30% of the GP.
Claudia?
I'm like, wait, I already answered.
Yeah, sorry, I'm so sorry. Sounds like Sveta.
I'd say that we follow the Michael Blank model. I think a lot of you might be familiar with that. I think it outlines it very nicely. It allows you to define, because those 3 main, as he said, capital raising is one aspect, boots on the ground, and then there's just the deal itself, from sourcing and due diligence and whatnot. So you want to know who's going to be doing all of those aspects, or the project management. Let's just add that as an aspect. So I like that because it defines it, and you can sit there with your team and have a conversation about it. It also depends on how much, I think it's going to be different if someone has brought a deal and is experienced and is just bringing something different, or has their fundraising set and has an idea of where they're getting, okay, this person, this part of the team is doing the EMD, this part of the team is sourcing, whatever it is, they sort of have that vision and they've actually been creating those pieces. That can make a difference too, versus we've got to start from scratch on everything and they're fresh. But I think this is important for people to know. If you're really gelling with that sponsor that you have, and it's working out, and the negotiations you feel are fair, I think that's important. And you're going to grow. You're going to grow deal after deal. And I think that's important to keep in your mind, because when I started, I had that exact same question. And as I've gone through it, it's evolved and changed. And now I understand why at that time I didn't fully understand.
Okay. George?
So I would say I'm open. I don't really have a formula that I would go off of. But again, it's going to, as Claudia said, depend on roles. And it's pretty clear what people are able to do when they come in. I know a lot of people feel like they're green, but you probably have more experience than most people who come into multifamily or commercial real estate. You've been in single family perhaps or you know what your skills are because you've done X or Y or Z. So what I would say is that when you come into it, you have to have some idea of what the roles are going to be and what the splits are going to look like, and that might need to change. I mean, if you say, hey, I'm going to raise 3/4 of the capital, and then it ends up being the other way around, then you might have to reorganize a little bit before you actually put together your LLC docs. But again, I think Smita said it very well. Whatever happens, you're going to learn a lot. The most important thing is that you get into productive deals with people who can help you take it across the finish line. And again, I don't have a set numbers. I really do, again, think that it depends. And who knows, you might think that you come in and you can't raise a lot of capital, or that you're not really sure of yourself in the asset management phase. But again, it's fair that those things should change over time.
And by the way, go ahead. Go ahead, Claudia.
I was just going to say, and don't be timid about negotiating that with who you're working with, because it is a negotiation, right? If you feel like you're doing a lot of the work and you're going to be able to do a lot of the work, then, negotiate that. No
Right.
one's here to, take advantage of anyone. It's a win-win. We want to partner with people that we can build up so that they can go back and build somebody else up. So that's how we look at it.
Yeah, I was just going to add to that. There's so much value in being able to, fund EMDs, key principals, being able to sign on the loan. There's a lot of people that have been making a ton of money over the last 60 days on just gap funding, helping people finish up their last, raises and taking a piece of the equity. So there's so many ways to get involved. And I want to basically accentuate what George said is almost everybody on this call has skills that could help an operation today. And so the longer that you're kind of waiting to hide your light under a bushel, the worse off that you're going to be, because there's so much value that you can provide today on systems and everything. So anyway, just wanted to wrap that up.
Thank you. So this one we did cover in the panel. Boots on the ground, important. Yay. Yep. I see yeses. George Smith. Yep. Boots on the ground. And it's very important. I agree. Even if we have property management on the ground, sometimes we have to follow up with them. So boots on the ground is super important. Question: what are some tools and resources that you use that people typically don't know about?
Have you guys used? Is everybody familiar? It's been a while since we've been on the acquisition, because we've got acquisition teams. But have you guys used Reonomy at all? Reonomy is relatively inexpensive, although it's probably much more expensive now. But great at kind of, if you were to just go through and find all of the sellers in a particular area that you wanted to pursue, putting those notes, you could use it as a CRM. We used it and found so many deals because the information that we found was better than CoStar and some of the more expensive sources. That would be one. Eventually, you're going to probably need to have a investor portal. We use Syndication Pro. We use Dappfolio, a couple others, but I think that's really good, organizing all your docs, etc. That's what I can think of at this point. Oh, we for our team, we use Monday.com, which is great at kind of the project management, so that we can kind of keep everybody held accountable and tracking everything. So those are some of the tools that we found really helpful.
Thank you. Claudia, George?
For asset management, for us, we have this, Excel spreadsheet that was created by a fellow student a while ago. It's called the Monday Morning Report. And for us, it's great because within one look, you have all your information there as far as collections, vacancy, all that information. And so our calls tend to go a little bit faster with our on-sites because of the fact that most of that information is on that spreadsheet. And this one was one that he developed, so we use it for most of our properties.
George?
Sure. So I'll reach out a little bit. I use Fred a lot, fred.stlouisfed.org. I spend a lot of time on macroeconomics. I'm not buying any data yet, but I will tell you that I think it's very important to understand what's going on out there right now. And there's some amazing tools that you can use. Get some data on where the housing market is going. And I think that'll be a great adjunct to whatever other tools you buy, like Reonomy or RealPage, etc.
Thank you for that. I never heard of that one. Do you use anything, Smita?
Yeah, that's what I've been thinking. What is it that's different? I use Bureau of Labor Statistics. I use the Milliken report. I like to do macro stuff. So I like to, that may sound odd, but just periodically I make time each week and I just read a ton of stuff from Multifamily Housing News and Globe and whatever, Wall Street, Fortune, whatever it is on housing. And then I just sit there and soak it in and think where the trends are going and then what's going to happen 2 steps next. And it just helps. It just helps me in knowing where it's going to go. It helps me be prepared for my investors. And it's not glamorous, but it just helps me get a big picture of what's going on so that I can be ready to talk to people and just be ready to bounce, you know?
I like it. Thank you. It is. Sometimes it's like, oh, do I want to sit down and read this stuff? No, but guess what? We have to do what we don't like sometimes. Question for the panelists. What are your thoughts on, and I know people say it's something like LIHTC, L-I-H-T-C. So, are those like the Section 8?
Light tech,
like,
Light
tech.
We looked at some light tech. I wouldn't be the greatest resource for that. I could definitely put you into touch with some people that are doing it here in San Diego, really good at it, and they're doing it across the country. So if anybody wants to reach out to me, I'd be happy to pass that along. I don't have too much experience with light tech, though.
Same, that's not in our wheelhouse either.
Yeah.
George, are you familiar?
I'm sorry, I was enjoying your amazing chat. There's some really awesome people contacting me right now. I thought you were asking about resources. I just gave mine.
Oh, no, we're on to, how do you say that again, Andy?
Light tech, yeah. Low income housing tax credit properties. So,
and if you're not, that's okay. If you're not familiar, that's okay. The question is
I'm familiar with that. I think it's a great program. I've never done it. You got to really study up. 2 ways to go. You can do the ground up, and those credits are really hard to get. And then you can also get the credits to rehab for an existing property, and that's a much easier game to play. But again, very, very complicated. I've looked at a few deals like that.
Okay. I see. That's as far as I got. Jeez. Everyone was putting in on climb a mountain, jump from a plane. Love it. Okay. I want everyone to be on here. Like, save the chat if you want to. Please don't ask me later. Everyone put their information in there. So grab it, look them up, study. Like, I'm a big advocate, and I hope you guys are okay with it. I tell everyone to research you guys, like, find out about you. I love Smita because she's always putting like funny memes on Facebook. I just can't stop cracking up. So yeah, all these people, wonderful. Thank you guys for joining us. I really don't see any other questions in the chat. That's all I have here for this evening. Jordan, any what are those called?
Yeah, I'll make a couple announcements. First and foremost, thank you guys so much for your time tonight. I learned so much from each of you, so thank you. I just want to put a little plug in here for Peak Partnership. Peak Partnership is our annual networking event. It will be held in Orlando this year next year in February. So we want to make sure that you're all there. This will be the biggest networking event of the year, so you don't want to miss out. I will put the link to register in the chat. And then also next week for our coaching calls, we will just be having one coaching call next week, which will be our monthly mindset on a little bit different date. So make sure you're listening. It will be on a Tuesday. So we'll send out a registration for that as well. But we look forward to having you guys on there next week.
Awesome. Really quick. This was Kim's first time moderating a coaching call all the way through from beginning to end. And the sponsorship call is not an easy feat. There's a lot going on a lot of the time. So I just want to give a huge shout out to Kim. She did a fantastic job for her first time. So great job, Kim. And to the sponsors, thank you so much. To the sponsors that took the time out to jump on and meet with all of the students and introduce yourselves and share your contact information and share the knowledge that y'all gained is invaluable. So we are extremely grateful for you and your time as well. So thank you. Kim, great job. And that's it for me. That's all I wanted to say. So thank you.